Welcome to the Financial Sense series. I am your host, Judy McCutcheon. As an experienced financial educator and impact coach, I am the creator of the 30-day Money Mindset Detox program. I am passionate about helping women build wealth from the inside out. And I have some really exciting things on the horizon, one of which is the Money Mindset Mini Detox course on January 16th. It's all about you building wealth from the inside out. So if you want to be informed when the registration is open, please click the link and join our wait list. In this 10-part series, we are discussing all things personal finance. We will discuss your money personalities, your money beliefs, your money values, savings, debt, investment, retirement, and everything in between. Money is such a powerful word that the mere mention of it can arouse extreme emotions. Money is central to everything we do. It helps us turn our dreams into reality and gives us the freedom to live life on our terms. Yet, the startling reality is that many of us are not formally trained. We never formally learn about money. Personal finance is not a subject taught in schools or colleges. A recent survey shows that 77% of people are stressed about money. As a matter of fact, the American Psychological Association cites money as the number one stressor in people's lives. Today, I am joined by three remarkable ladies from different countries, cultures, and backgrounds. However, they all have something in common. They all work in the finance industry. And at one point or the other, I worked with two of them in this from the same company. Miss Tessa Usher. Tessa is a certified finance services specialist and life underwriting training council fellow. She is currently a unit manager at Sagicor Belize and has been in the insurance and financial planning space for the past 16 years. When I started my journey in the financial space, Tessa and I worked together for Guardian Life Limited Belize. We were partners. Tessa has been married for the last 30 years and the mother of three awesome, awesome kids and a grandson and beautiful little Maddie. Tajine Brown McBean is an author, speaker, and coach on all things money. Her book is entitled Money Moves That Matter: Simple Steps to Become Debt Free, and her book is available on Amazon. Tajine knows money from both sides of the table. She's been a banker with Scotiabank Jamaica for 22 years before leaving to start her own business. We supposed to have a third person with us, but she's having some connectivity issues. When she joins us, I'm going to introduce her. Ladies, welcome and thank you for being here as we continue the money discussion. The idea behind these talks is to educate, get us talking openly about money, and to get people to start having better relationship with their finances. It's also to help it is also to help to develop a roadmap and to get people motivated to really start to do something with their money. But before we get right in, ladies, maybe you want to tell the audience, tell our viewers something about yourself. Tessa?
Good afternoon, Judy. Good afternoon to the other, to the invited, not invited guests, but yes, invited guests, and to the audience. Good afternoon. It's a pleasure to be here this afternoon to share with you all on the importance of planning, and especially planning in a time like this. But I want to say that I want to echo what Judy said. I have 16 years experience in the insurance industry. I was sharing with someone this morning that whenever they hear my name now, I was talking to a lady yesterday and she said, "What's your name?" Yes, my name is Tessa Usher. Oh, the insurance lady. So my name is almost now synonymous with insurance. I've been in the industry for 16 years, like Judy said, and I have had extensive experience in selling in terms of helping people to put in place financial plans for their future, for their loved ones, and also experience in the area of management. I just recently take over management again since July. If I can differentiate between both, I would say that I love selling. I love being out there talking to people about how important it is to put things in place. But I believe that I need to give back, and I need to, as I'm getting older, and there are more persons who are coming up behind that need to have that same level of experience and expertise in this area. And so I decided, you know what, let me just take on the management role, but I still sell. And yes, I'm married to Louis, my husband, Louis Usher, for 30 years, and I have four beautiful children and a grandson whom I will say adores me a lot. So that's just a little bit about myself.
Thank you. Thank you, Tessa. Tajine?
Yes, thank you. Thank you, Judy, for having me today. It's nice to be here with Tessa as well. And to the audience at large. So I started in banking in 1995, and I started at Bank of Nova Scotia Jamaica Limited. And I thought about going into banking because I realized that I was never good with money. Initially, I started out, I was the type of person that wanted to become an entrepreneur, but I saw so many persons around me not managing money well, and that was one of the reasons why I went into banking. So, from banking, I've learned some of the mistakes that some people are having now, and I've learned how to get over some of those hurdles. And I also was at JN Bank as well. So it's actually Bank of Nova Scotia and JN Bank. And I learned a lot being at those two institutions, which enabled me to get some of the insight to write the book, Money Moves That Matter, Simple Steps to Become Debt Free. So straight from high school into the financial world. I am still in the financial world in the sense that I have my own company business called Money Coaching Services. So we offer consultations to persons from the budgeting stage, showing them how to manage their debt, and also show them how to do their financial planning. And then also recently, I am also a part of insurance. So that is basically a nutshell for my side. I'm married for over 19 years and I have two boys.
All right. Thank you for giving our audience a little bit of insight into who you are. So we're going to dive right in. Over the last 13 years, I've been in the financial space. One of the things I've learned about money is not so much the hard skills, but it's a handful of behavioral skills that is needed to get us to really be able to deal with our money properly. In his book, The Psychology of Money, Morgan Housel states that behavior is hard to teach, even to the smartest people. And I was doing my research for this episode. One of the most common financial mistakes that was cited is not having a plan. So, as adults, right, we are solely responsible for our financial future. However, with what is happening globally, with the global economy, savings could be extremely difficult for some people. Some people have lost their jobs, incomes have been cut in half. And so we have to be practical with some of the things that people can afford to do. But what most is required, I have found, is behavior changes. So, how do you think, with everything that's happening, people can plan financially with what they have? And how can they adjust those behaviors to suit what is happening right now? Tessa?
Let me start by saying that because of our maybe our mindset, we are of the belief that because we have less, we are not in a position to plan. We are not in a position to put things in place. When we have more, we are still not in a position to be able to do so because we are of the belief that we have time. Now, this has been my message since we have been faced with this pandemic, even more so now than ever. Even if I am still employed and I am on 50% of my income, I want to say that you need to now more than ever plan prudently to be able to look at, to be able to function on a daily basis as if you would have had sufficient in sufficient finances in place. By that I mean that when you have a little, you want to be able to manage it accordingly. You want to be able to look at the little that you have and say, you know what? I need to ensure that if I have $5, I want to ensure that it is proportioned accordingly. And this has been my message, like I said, that if you have a lump sum of monies in place, you will not do the things that you ought to do because you feel you are of the opinion that there's always going to be that lump sum of monies in place. But if I can tell you, let me sit with you and the little that you have, let's manage it properly, then I will see. This little that you have may not be able to give you hundreds of thousands of dollars. But if I can tell you, take $1 out of that five and let's put a life insurance in place to protect your family. That could yield you $100,000. If I tell you, take a second dollar and put it in place for something to protect your health, your in the event that you become disabled or you become sick, you can tap into, let's say, a $500,000 health plan. And I'm only using small figures for ease of reference. If I can tell you the third dollar, you can take that, and that's for your daily expenses to buy your living expenses and to take care of your day-to-day bills. That's the third dollar. And the fourth dollar, I will say, let's use that for put something in place for retirement. And the fifth dollar, I'll say, let's put that aside for emergency purposes. No, it's easier to manage that $5 the way I am recommending rather than you take that $5 and try to take on the risk on your own, and you will always fall short because we will never be in a position where we can save sufficient for the things that you want to do, such as I have mentioned just now, retirement or protecting the family or illness of that sort. So yes, it looks maybe impossible for you to plan right now, but when you look at it and you dissect it the way I have suggested, it makes it easier. And I call it prudent financial planning because you're taking the little that you have and making the most of it.
Thanks, Cecil. But listen, in the Caribbean, right, we don't have a culture of having using a financial planner, using a money coach. Most of our we say we have our budget in our head. That's not a culture, and insurance isn't a culture really that people believe in. So yeah, Tajin, how do you think we can get people to shift their mindset to the point where they start to see planning for their future as something that's really critical?
Okay, when it comes to planning, you first have to identify what type of person you're dealing with. Is this the type of person who is used to budgeting, or as I say, do they budget and their budgeting is in their head? Because you have a total different scenario with those two individuals. One has already started some discipline steps, while the other one is working off what he thinks he has in his head. And if he was supposed to put pen to paper, he would realize what he has in his head falls short. So the first thing that needs to be done is an assessment of what it is that you actually have to work with. Then you need to identify now what are the areas of priority. So you can list certain areas like, okay, you need to take care of the family bills. right? You need to set aside something that, say you're renting now, and for some reason, some way down the line, you want to be able to own a home. What does that look like? Do you need to go to the bank to find out what are the requirements, what are the steps that I will need to take in the future to achieve this financial goal? So each person has to bear in mind, what goal are you trying to work towards? And then find the person who is in that area to say, okay, let me just take a half an hour or an hour and go through what are the steps that will be required for you to do this before you start. Because a lot of persons start a financial plan that they have in their mind, and when they're in the middle of it, they realize that it cannot work because certain core fundamental structure that should be in that planning does not exist. So there are areas that can top you up, like insurance, for if you are, say, the breadwinner, and you think that if you were to pass away, your family would be drastically affected by losing you and your income. So you would think about, okay, insurance would be one of the priorities. What else would be a priority now in COVID time? So you basically have to pencil out what is keeping you up at night, and you put one or two priorities on those lists and create your financial goals around it and do the homework.
Thank you. We have Median joining us. So I just like to say welcome, Median. And
At last, thank you so much. Compliment of this season to everybody. I had every manner of stress just to get here, but I'm here. So
great,
yes,
beautiful.
thank you. I couldn't hear the conversation that went so far, but I did know that you asked people to introduce themselves. So quickly, Median Mahon Henry, and I'm just really pleased. 24 years with Guardian Life, and I think there's nothing I haven't seen in terms of money and planning and having no money and some money and not thinking people have enough money to do anything with. So I know the experiences that we've had would be similar.
All right,
All right,
great.
great.
We were just talking about the mindset that is required for people to start a plan, to get into that the mindset of planning ahead, planning for their future, because it's not something that we're really accustomed to. It's not a cultural thing for us to really plan with our money, have a budget and put things in place so that we can see what happens ahead. So we were just talking about how can we get people to really start thinking of their money and thinking of it in a way that they see it as something really important, that it's not the root of all evil, and that they can really, start planning properly ahead for the future. How do you think we can get people to change that mindset?
Well, culturally, we have not been raised, many of us, to make the relationship between the money we earn and the dreams that we have. We would have assumed a lot of things when we were growing up, that we would get the education, because I come from a generation that had tremendous opportunities to be educated, unlike our parents and grandparents, some of them. And we just assumed that because we would get this good job or open a business, that we would be wealthy and we would have all the luxuries of life, and it would just happen like that. And it's only because it's not happening like that that people are beginning to think that they may need to put some strategies in place. My mother was the best financial planner I know, and she worked for 80 what
All
she
right, we seem
planned
to
to
have
do
lost.
and by when When? All right.
All right, we
She's
seem to
nice.
have lost Median for a little bit. We'll try to get her back. But we're talking about planning and financial planning and planning, but what really is financial planning, ladies? So Jean, you can go ahead.
Anyone? Okay. Okay. Financial planning is basically having a roadmap to the future that you want. What is it that you're looking forward to in the future? Is it that you want to be able to get cash flow from assets that you own? Is it that you want to be able to start a business that you can say, okay, I can leave this as my legacy for my family. I don't have to worry about the next generation. So, financial planning is a personal goal in a sense that a person will say, okay, if I'm able to pay off my mortgage early and I'm able to pay off all my loans, then I'm good with that. I reach financial heaven with that. While other persons would say, okay, I want to be able to invest my money. I want to be able to ensure that if anything happens, insurance covers everything for death, disability, and I want to ensure that all the areas are covered, retirement, that critical illness is covered, disability is covered, and death is covered. So some people are more ambitious as it relates to financial planning than others, and some people are just testing the waters to see if they can actually improve their current situation.
When we talk about planning, just like when we talk about wills, right?
Mhm.
People feel like they're going to die. So how do we really get them out of that mode of thinking? If I plan, it means that I'm going to die. I mean, Median, you have been in this thing for 24 years. What are your thoughts?
Well, I have news for them. They are going to die. But how you die makes a difference. And what you do before you die makes a difference to the people you leave behind that you claim you love, your legacy. And it also will ensure that you live, if you live long and you are happy to be an elderly, that you can be comfortable and you don't have to live on food stamps, you don't have to depend on handouts or charity or your children to mind you, which a lot of people have unfortunately had to do because their children are making so much money and they expect them to take care of them. You want to be independently comfortable, and that takes putting seed in the ground and giving it time to grow so that by the time you need it, there's fruit. And you will die. We're all going to die.
Exactly. And I like how you said when you become elderly, because I truly believe this is something I say to people all the time. If you don't die young, you are going to get old, so you might as well plan for getting old, you know and even with very little, people can plan. There are creative ways that people can plan with the little that they have. But what are the elements that people should include in a financial plan? What are the things? Because we're talking about plan, we know what planning is, but what are the things that we should include when we're talking to people about planning for their financial future? Tajin?
I think first and foremost, you have to get people comfortable with even just doing a simple budget, because practicing something early makes it more a part of you. You're less resistant to it. I think a lot of persons are scared to address certain areas as it relates to finances because they think it's only the young and bright that understand what is really happening as it relates to facts and figures and numbers. So I think what we need to do is move from persons thinking that finance is something that is scary. Finance can be fun. I said to one person, how is it that you tell me that you're going out and all of these things and there's nothing in your budget for fun? You are actually spending the money and there's nothing there to say, okay, there is a category for this. Persons have like house insurance and car insurance, and yet many of them wait until the time that the premium is due to be able and running up and down, running to the bank to find the money. When a simpler solution would be just find out what the annual premium is going to be and divide the number by 12. Find simpler ways to make finance easy and less stressful.
As you say that, right? One of the things when people hear financial plan, they think of a big complicated document. They think everything is just complicated. So it's complicated, so they'll rather do nothing about it. But does a plan have to be fancy, Tessa? Does it have to be all bells and whistles, or can there just be something nice and simple?
It can be something. It can be something nice and simple. Nothing fancy. You can, and I like to have that small conversation with someone, just talking to them about life and just talking to them about goals and what do they want to accomplish and how do they plan to get there. And it's just having that conversation, Judy, just talking to them about the importance of, putting things in place. Look at this pandemic that we are presently in. A lot of persons were, many of us, I would say the majority of us were not prepared, because I used to say to my clients that you need to have at least 6 months income, that in the event something should happen, you may lose your job or any emergency, that you can tap into that savings that you would have saved up previously. But now I changed that to you need to have at least 12 months income, because nobody expected a pandemic, and nobody expected a pandemic to have lasted so long. Fear comes in, and this is what the lack of planning does. When you don't plan accordingly or properly, fear steps in. And when fear steps in, it immobilizes you, it cripples you. It you it you do things that you wouldn't necessarily do. You engage in things that you wouldn't necessarily engage in. And so it is important to have that conversation. It may just, it doesn't mean that and I like to say it's a free consultation without any obligation. Let's talk about life. And after you have heard me, you may just want to say, you know what, can I start with something small? Yes, you can. And we can always review and go over and make adjustments where necessary when finances permit. So yes, it's a simple plan. It can be something very simple, it can be something very small and very affordable. But sometimes I do believe that persons feel that when they hear the word financial plan or financial planning, they're thinking that, wow, I would have to be putting aside hundreds of dollars or thousands of dollars, or that's out of my league. No, it can start very small and you can grow that plan or grow whatever you want to grow over time, right?
Yes, people feel a financial plan is for people with money. Yeah, but a financial plan really is for everybody, especially if you have no money. So one of the things, right, when financial planners or financial educators or coaches talk about having a financial plan or doing a budget, it usually means that you're planning for something. You have something that you're looking ahead. And I believe that a lot of people don't have a plan, don't have a budget because they don't have something to look forward to. There's nothing that they have to achieve. So let's talk about that, because I think that having a goal and setting goals and having a vision is an important part of having a financial plan, because really and truly, if I have nothing to achieve, what am I planning for? Why can't I just spend all my money right now and just get pay again the next week and spend all again? What are some of the favorite ways that, or some of the simple ways actually, that we can help people to put their goals and the visions together so that they can see that there is a future for them? Tajin? Or
Tajin?
Mary, sorry, go
Or
ahead.
maybe I'm sorry. Okay. The Bible says, "Be fruitful and multiply." It never said start to do that only when you have a lot of money to multiply. So as was said earlier, the conversation really has to be one where we are honest about where we are and what do we have in our hand. And I try to get people to look at what they have in their hand and divide it into five parts. Well, six really. Your living expenses, your short term savings, your long term savings, your tithing or your charity, your personal development, because without that, you're not going to grow from where you are to become what you want to be, and play. We talked about play earlier. Young people learn by playing, children learn by playing, adults develop their creative powers by playing. And we have to invest in the things we enjoy, otherwise, earning money is going to be a chore. And therefore, if you have X amount, you have to apply a little of that to all of those categories of living so that it can change your circumstance down the road. It can acquire assets that you dream of acquiring, and it can help you become a better human over time. Because that's what you need to use your money to do. It's not just to spend to eat, it's not just to spend to pay the bank your mortgage, it's to develop you and your humanness. So you have to use that money. It's the tool you have, it's what you've been blessed with. And it doesn't matter how much it is. And now, because people have less than they had before, they almost give up and think best they don't bother to plan. And it's more now important to plan than ever before. So,
So Tajin, as a money coach, right? You must. I'm sure that you you meet people who they want to save, they want to do stuff, but they don't know how. They don't know where to start. How do you help them get on that road?
Okay. I basically focus more on them realizing that when you're just starting out to save, putting the emphasis on you having to save a specific amount is not really the most important thing at that time. The most important thing at that time is to say, okay, if the person says, I cannot afford to save 10% right now, you say, okay, can you afford to save one? And then we're going to say, of course, I can't save 1% because it feels like nothing. So when they start putting the money aside now, after a while, and they see the money growing, they'll say, okay, so suppose I was really saving 10. They start looking for ways to save more because they are now seeing the benefits for themselves instead of somebody saying to them, this is the benefit you are going to get. Say they get to see it for themselves. So it's more of a situation that you are basically retraining their mind that savings is a good thing, but you can also feel the emotional enjoyment of seeing your money grow.
So I want to bring the conversation back to insurance, because insurance is a nice, heated topic. Insurances get people hot. And I remember I was doing a class, and this guy said to me, "Well, I ain't leaving my money for no man to spend, or I struggle and my kids, why can't they struggle just the same way
Mhm,
as I did?" Now,
mhm,
that I find is very prevalent in the Black community, in our community, right? And how can we get our people to realize, to understand that we have to start leaving a legacy? It's the only way that we can start to get our people to rise up and rise out. I think some people take the Bible literally when it says the poor will always be among us. But how can we really use insurance? And this, I'm directing this question at both Tessa and Median, and you can take it from different angles. One, Median, you can look at it from the life insurance perspective, and Tessa, I want you to look at it from the critical illness perspective. Median. Oh,
Have to be convinced. And that's the job of a good agent, to convince people that what happens after you are put in that grave makes all the difference in the world to the children and the wife that you leave behind. A lot of men have wives that don't work. And for some reason, they don't seem to understand what risk they're putting that wife in if they die suddenly. And death suddenly now is not abnormal. So, I mean, I think it's beginning to become more evident, and people are now concerned about their mortality because of COVID. So, a lot of people have called to say that they are concerned that they don't have enough, they don't have their beneficiaries in order, and they are now beginning to make the connections. And it really is such an important thing to sign on that dotted line. I mean, it makes a difference between a child going to university or not. It makes a difference between the bank taking back a home or not. It makes all the difference to the people that are left behind. Because, as we said earlier, savings is slow in coming. So, if you don't have insurance, it means whatever you would have had in the bank is all your family has to live on for the next 15, 20 years until the children are grown. Insurance is really the only key. It is absolutely the only way to move you from having $100,000 in the bank today to having $3 million in a check payable to your family tomorrow. I don't know how else to make that clear to people. Unfortunately, they're beginning to see it.
and one of the things that people say, one of the things actually that I learned when I was working in insurance is that when a man dies and leaves money for his family, that and if the kids are small, that wife, she never brings some another man into the home. She never really has another man until the kids are grown. However, if you die without providing for them, then so many different things can happen, especially when you have young children. And we used to be able to say, well, if we have young daughters, now it's both daughters and sons that you have to be so careful about with who you bring into the home. So it is so important that people, both men and women, actually see the importance of providing and leaving a legacy, and see how important planning is in that particular process. But let's look at it from a critical illness standpoint, Tessa.
The we can take this pandemic for example. But before I even go there, I could remember early in my career, I remembered speaking to a family that the dad had died from cancer, but the family relayed to us that they borrowed X amount of dollars. It was over like $200,000 to help the dad. And the dad had passed away. It was at least 3 years, and they were still left with that loan to pay off. And they had a business, and the business was the one that was financing that loan. Now, when you don't have a critical illness or a health insurance plan in place, the truth be told, as we get older, our parts become less useful. We can take care of it, yes, Judy, as much as we can, but there are certain external factors that would affect us. For example, the air you breathe is not healthy. The water you drink, to a certain extent, is full of things to preserve it. There are factors that we fight against. The fruits that we eat, if you don't grow them in your backyard, they're filled with pesticides that they spray to keep away the animals. And so, as much as I may want to live healthy, and as much as I will do my utmost best to live healthy, I have to be mindful that there are certain things that I cannot avoid. Therefore, the illness steps in. And when illness steps in, more often than not, a person does not have those finances set aside or in the bank to be able to take care of that illness. You find when things are not in place, you find that when my back is against the wall, I will look at, maybe I have some assets that I have to liquidate. And when I try to liquidate those assets, I may not get a dollar for a dollar. I may get 50 cents for the dollar because I am in desperate need of cash flow. So I need to liquidate those assets ASAP. In other words, when you don't transfer that risk to a company that can afford to take on that risk, it is therefore saying that you are willing to accept the risk on your own. And if you are willing to accept that risk on your own, you are telling me two things. When the time comes, I have sufficient money set aside to be able to take care of my illness. Or two, if you're saying to me, I cannot afford that $100 to pay for that plan, then it's telling me you simply cannot afford. When the time comes, it may mean that you cannot afford to live, because if you cannot afford $100, you sure can't afford a health bill. So Judy, it is in a time that we are living in, and I see it right in my backyard, where persons are ill, insurances does not cover 100%. Yes, it's a co-payment and a deductible and all that. But there are plans that you can put in place, and there are measures that you can take. And that is why it is important to sit and speak to your financial advisor or your insurance advisor, because then he or she is able to help you with the budget that you may have, to look at it to see where you can have cost savings and save and put things in place. And it gives you that peace of mind. It gives you that peace of mind where you are able to, you know what, sleep better at night. Something should happen, I know that I have things in place that I can be able to move forward. Persons being diagnosed in our country as we speak with COVID and are hospitalized simply cannot afford to be hospitalized because they don't have a plan. And so you find that you either have to stay home and you either get better, or you know what's the next step. There's a cemetery there. And it's unfortunate that We are not reaching out to more persons to share these information. And you know, Judy, we did our part when you were here. And I continue to. I love speaking to the masses, and I love speaking in groups and because I feel like I can get the message out to more persons. That's all I can do. Get the message out. But it's up to you to take action. But in our Caribbean setting that we are faced with, we weren't raised with as our parents being insurance savvy. So you find our priorities are all over the place. I will be the first to say I can't get through to young people. Can't get through to young people because they feel that they have another 100 years to live. They feel that I don't need that. That's not for me. And so you find that I will buy the car. I know I can pay the car note, maybe $200 or $300 for the car. But little do you know that it's not a new car. And you have to fuel that car. And you have to fix the parts because it's not new. And so you find that their focus is not to put a financial plan in place, even though they are the ones who benefit, the young persons are the ones who would benefit the most because they are young. And they would stand to gain the most because they're young, and when you start saving at an early age, the time value of money, the money increases in value and all that sort of thing. But it is culture, has a lot to do with culture. It has a lot to do with perception. You know, it has a lot to do with priorities.
That's right. That's right. And to Tessa, it's important that we share stories because I'm going to share a story now. We have a question, but I want to share this story first. This story is about one of your clients. So Tessa had a client who she had sold a critical illness policy to. The lady came and canceled the policy. About 2 months later, she was diagnosed with cancer and then want to find out, can she get back the policy? It doesn't work like that. For me, it's always good to have it and not need it than to need it and don't have it. It's really, really important. But we have a question. Kayleen is asking, what about the concern that insurance companies are hesitant to pay when the person dies? Is this so? And how do you deal with those concerns? Maidan, you want to take that question?
Sure. I think that people think that the companies are hesitant because the companies are doing due diligence to ensure that the cause of death is what they say it is. And unfortunately, what has happened in my experience, where you would have had a claim that may not have been honored, and everybody says the insurance company thief their money and they bad and they whatever. Sometimes people don't disclose when they are buying the insurance issues that they may have had in the past. They don't tell the agent and they don't disclose to the company. And if at the point that death happens, the company discovers that there was non-disclosure of a fact that was critical to the assessment of their risk, then you may find an instance where the company they still may not pay. And that is rare, but that may have been an instance in which you'd hear somebody say, after all these years of paying this policy, look what come and happened to my dad or my mom, they didn't get the money. And sometimes a policy may have lapsed and the family didn't know. And when the death occurs, the person is going with the policy to the company, merrily expecting to be given this check. And the person stopped paying the premiums a year or two before. So it's not always that the company is hesitant to pay. There are also other factors that would contribute to non-payment. But I think 99% of the time, where there's a straightforward application, death, and the information is provided, the companies pay. That's what my experience has been.
And that has been my experience too, because I I had a client, and he died, but his policy had lapsed, and he kept paying, and the company kept taking his money. So when he died, even though his policy had lapsed, they still had to honor that because there was an expectation. He still kept paying and they kept taking. So there is that. But there's also the thing too, when people talk about insurance, is that people don't tell you the full information. So when somebody's telling you, oh, insurance thief, and they never pay and they never do this, they don't there's a part of the story that they are not disclosing, because you know and then too, people don't understand insurance, and there is a real gray area around insurance, and I really, for me, I am throwing that back out to the insurance advisors, to the agents, to the companies, that they have to demystify insurance for people, because people see insurance as a plenty small lines, but they call it the fine print. And I say to them, there's really no fine print. Everything is printed in the same font. But there is this demystification. There is this demystification that is needed in terms of insurance. But
As
sorry, go ahead.
I think as it relates to fine print, a lot of them associate anything that is financially, like as it relates to banking or insurance, that there's a fine print, there is a clause that is there to catch them, there's a boogeyman, that they don't realize that that is not always the case. But if you get a document, it's best that you read that all the way through, because at that time you'll be able to have a better assessment as to what it is you're getting yourself involved in, right? So persons will even come to a commercial bank and even get a credit card, and they don't realize that if you miss a payment on a credit card, that some financial institutions have a penalty rate. So if your current rate is like 45%, like in Jamaica for some of our credit cards, that if you don't pay your credit card on time, that rate can go up to 55% and will not go down until the person has been consecutively paying that credit card for 6 months. But it is just knowledge that is not being passed on or just not read. So if they are the type of persons who don't like to read, I know most of us have at least one family member who like to read, let them read it for you, and at least you will be aware. The other thing about finance is that a lot of people don't know when to do what. They don't understand the purpose of a budget. They don't understand the purpose of an emergency fund, even though a lot of financial experts has been telling them that 3 to 6 months of your expenses to do this. They're saying, why should I put down all of this money and nothing is happening? They actually wait till the problem comes, and it's also in insurance. They wait till the problem comes, then that is the time they see the need. There is no forward thinking. They always think today is good, tomorrow is going to be good. And finance is not about that. Finance is always you balancing the negative, so that if the negative comes, it has less of a negative effect on you and your family.
Definitely. Definitely. We are about to wrap up. Look at that. 1 hour has gone already. We are about to wrap up. So, what are two tips that each of you can give to our viewers that can help them to start putting their financial plan together, so that they can, start to see down the road that there is a possibility for them, for their kids, for the children. I'm really, really interested in us starting to leave a legacy for several generations down the road. How can we help people to start to do that?
I would want to say seek out an advisor and start having that conversation. There isn't any commitment. And I like when my client or my prospective client is relaxed. Because the first thing I would say to that person, there isn't any obligation on your part, there isn't any commitment. But let's have that conversation. And after we have had that conversation and you like what you hear, give me an opportunity to present to you a plan based on what you want or based on your goals. So the first thing that needs to be done is having that conversation to find out that roadmap where you want to go. And I always say any road can take you there, but I would want to know the most effective and the most efficient way that I can get there rather than going around and around or about, right? So it's that conversation that we need to have to start thinking about the importance of your future, your goals, your objectives, and the reason why you do what you do every day.
Thank you.
Yes, I would say that a lot of people think that taking loans is a quick way to get out of anything, but a lot of people have been living above their means before COVID, and COVID now has caused an additional blow. What I say to people is that when you're taking a loan, you must know the purpose of the loan. Will this loan help you to create a better future for tomorrow? All of your loans cannot be for fun and decoration, because you are racking up debt for your younger generation. You're racking up debt for your children. So you have to bear in mind when you take a loan, you're not only supposed to know if you can afford it, you also should know what is the interest rate. A lot of people take loans and they have no idea what is the interest rate. When you ask them, they don't know. When you them check it out, a commercial bank loan is probably 15%, and the one they take at the payday loan is 30%, 40%. You understand? So they don't realize that where they are going is actually eating away their wealth the way they are spending it. So, guys, focus on the interest rate. Focus on where you're spending your money. What is the outcome that it is that you're trying to achieve? Are you trying to develop your personal development? So you're going to get a student loan or so on. What is the end goal? Have in mind what the end goal is so that you can make a better plan. Two, a lot of persons, as soon as they see advertisements about loan, they cannot see a loan and not take it. They're supplementing their income with loans and not realizing that over time there is actually a ratio that person can use to know if you're having too much debt. It's called a debt to income ratio. Basically, what you do is you divide your monthly debt obligations by your gross monthly income. So your gross monthly income is your income before tax, and you're going to get a percentage. So say the percentage that you get is between 1 and 35. That is a good range. It's saying to bankers and those in the financial industry that you're good at managing debt. For those who fall between 36 and 49, it means that you are okay. But if anything happens, like Mr. COVID, that you will be pushed out of this comfort zone, right? And you will start having issues. So 36 to 49 is okay. When you reach to 50% or more, And this is a relation to how much debt you have in comparison to your gross income. Here is where all hell starts to break loose with your finances. And I think a lot of people never had an idea of how to really assess if they have too much debt that could cause a problem for them in the future.
Because of course it's not part of what we do. What we do is that we see the advertisement, we carnival coming up, this happening, Christmas, we need to change the curtains, we need to buy the costume, and we just do that. Marian, what are your two tips?
Things. Basically, we do not have about 180 more paychecks to make all the difference in the world with the rest of your life. So you don't have all the time in the world. You need to plan with this paycheck coming up at the end of the month. And secondly, if you are living on 100% of your income, because you hear people saying they have more month than money, which means the money done by the 15th or the 20th of the month, it means you are robbing yourself of savings, of future wealth, of the ability to really enjoy your money and play and personally develop by educating yourself or your children or doing a program that could get you into business, because that's where your money has to come from. But if you're using it all paying bills, mortgage, car note, etc., then it's time to take a financial selfie. Let's look at where we are really at. Do we really need two cars in the household? Can we afford it? Perhaps we may need to sell one and cut the living expenses down. I mean, people have to make hard decisions because people are losing businesses, people are losing mortgages, people are losing lives because of stress. We have to sit and honestly look at where we are and make some choices because the consequences are dire. And we have to make those decisions today.
Thank you. Some of the some of the money mistakes I have seen people make is excessive spending. Like we spend because we don't have a budget. Living on credit, you know? And what somebody brought up about the new car. You buy a car without thinking through all the expenses that you have to think. You have to buy tire, you have to buy brakes, you have to buy gas, there's so many things that you have to do when you buy uh, a car. People aren't saving, people are not investing. Investing is not a Caribbean cultural thing. Isn't is not something that we used to. So we're not doing that. Not having the necessary insurances, that is so important. I mean, so many people are one medical diagnosis away from bankruptcy. And that is so true. And then you see people who are using their savings to pay down debt. That is another big mistake that people make. But for me, one of the biggest things is that their behavior when it comes to money. And, let's be honest, we haven't really, money isn't something that we're taught. Money isn't something that we grew up somebody teaching us, putting us to sit down and show us this is what you do, this is how you do. So we kind of do what we know. But what I believe is that we do what we know until we know better. And when we know better, we simply do better. So for me, people are well advised to monitor their spending because every little bit adds up. Every little bit. Even if you buy a pack of gum every single day for $1.25, multiply that by 365, and you will see how much money you are spending. You're buying coffee every single day, multiply that by 365, and you will see. Because what I think people do is they look at the $3 or the $4, but they don't look at it from an annual standpoint, and that is where they make the biggest mistake. So I also want to ask people to think carefully before going into that. Do you really need that loan? Do you? I mean, one of the things people do is borrow money to buy school books. Now, for me, September comes every year. Every year, September comes. The same time of the year, September comes. Why can't you plan? Every little you put away, you put away, you put away, so that when you see that August holiday reach, you can buy the children books or you can rent in the school program, so that you don't have to put yourself in that particular debt. And so at this point, I want to throw out a challenge to everybody, whether you're listening on the live or whether you're listening on the replay. I'm also throwing it out to the guests. It's a $5 challenge, and I have started that challenge. Every $5 you get, you save it. Everyone, because $5 is an easy thing to save, right? So every $5 you get, if you think you have no money to save, every $5 you get, you put it away, you put it away, you put it away, you save it, you don't touch it, you don't cheat. At the end of the year, you will be surprised at the amount of money you would have saved. And once you can see that money, it spurs you on to do more and do more and do more. So, this is my challenge to you, to really let's get into that $5 challenge. And every week I'm going to remind people about that. Tajin?
I wanted to add to that as a challenge is that persons need to set up a purpose for accounts. So don't keep your savings in your salary account, because most of us get confused when our savings is in our salary account. Set aside a different account for savings and a different account for if you're going to pay like insurance for your house or car and so on. So it makes it easier for you to put aside money for those expenses. And then when you know it's time for your insurance, you don't have to worry because you have an account set aside for that purpose.
Thanks. It really is important that we separate our money. So yes, we don't get confused. Don't put all in the same pot. Like how people say, well, all the food has to go into one spot, so let me just mix up everything. Don't do that with your money, because all your money isn't going in the one spot. So don't forget, I just want to remind people that about the money mindset detox mini course that's coming up on January 16th, 2021. This is all about helping you to build wealth from the inside out. Because if you can see around all the discussion, most of what people do is their behavior and it's their mindset that causes that particular type of behavior. Don't forget to like, comment, share, follow me and my guests. The um, details are up on the screen. Ladies, I really like to thank you very much for joining me in this discussion today. This has really, really been a good decision, a good discussion. Sorry, it's a discussion that is so, so needed. Um, so I just want to say thanks to our audience. We had we had um we had some we had a good viewership today. So thank to the audience, and thank you who will be joining us in the replay. Thank you for looking at our discussion today, and I invite you to join us again next week, same time, same place. I am your host, Judy McCutcheon. Next week we will be discussing money and stress, because as we go into 2021, I can promise you that it's not going to be any easier than 2020. As a matter of fact, I
Mhm.
think this is just me. My money pundit thing here. This is just me saying that I think that it is going to be a little bit tougher in 2021 than it was in 2020. So join me next week, where I'll have a psychologist. I'll have a somebody who is into yoga and somebody who is into mindfulness, when we talk about money and stress and how we can cope. So I want to thank you. It is Christmas Eve. Merry Christmas to you and
Merry
your
Christmas,
family,
guys.
lady. Thank you very much. I wish you a happy, safe, and enjoyable Christmas. Don't eat too much. Remember, your health is also extremely important. Try and get some exercise in over the next 2 weeks. Gyms may be closed or whatever, but try and do something. So, thank you. And please remember to wear your mask and social distance. Merry Christmas to you and yours. Thank
Bless
you
you
very
guys.